The stock market. Just hearing those words can feel, well, a little intimidating, right? But it really doesn't have to be. In this explainer, we're going to demystify the whole thing, bust some common myths, and give you a super clear roadmap to owning your very first share. So, let's dive right in. So, I want to start with this crazy story I found that'll really make you think. Get this, a group of 10-year-olds and a group of expert chartered accountants were both asked to pick a portfolio of stocks. Now, fast forward 5 years. The kids didn't just win, they absolutely crushed the experts. How on earth is that possible? We're going to get to the secret behind their success a little later. But first, let's look at the incredible potential they were tapping into. Just look at this number, 700 crore rupees. That's, well, it's an almost unimaginable amount of money. But I promise you, it's a very real figure that shows the mind-blowing power of the stock market. But the big question is, where did a number like this even come from?
Well, that massive number is what a single 10,000 rupee investment in Wipro made 40 years ago could be worth today. You see it right there. That one little seed of 10,000 rupees, when you give it enough time, can grow into an absolute treasure chest. This isn't some get-rich-quick thing. It's all about the power of time.
But, and this is a huge but, we have to be realistic here. For every amazing story like Wipro, there are other stories of companies where an investment could have lost most of its value. You see, the potential for incredible growth always comes hand in hand with significant risk. The key isn't to avoid risk completely, but to understand it and manage it. And that starts with busting some common myths. All right, let's just tackle the biggest fears and misconceptions head on, because once you really understand the basics, you'll have the confidence you need to make smart, informed decisions. Okay, first things first. What even is a share? Forget all the complicated jargon for a second. Think of it like this. If your friend starts a business and you give them some money to help out, you'd expect a piece of the profits, right? You're basically a part owner. A share is exactly that, just for a big public company. So when you buy a share of, say, Tata or Reliance, you're becoming a tiny co-owner of that massive business. Simple as that. This is probably the #1 fear that keeps people from ever getting started. We see it in the movies all the time, we hear these crazy stories. It's often painted as this high-stakes casino where you can lose everything in a blink. But is that really what investing is all about? This slide just nails the difference. On one side, you've got the lottery mindset of gambling. That's all about pure luck, random chance, and a quick thrill. But on the other side, you have the business owner mindset of investing. You're not just betting on a random number, you're partnering with a business you actually believe in for long-term growth. So the most important thing is to adopt this investor's mindset. What does that really mean? It means focusing on the long term. We're talking years, not days. It means doing a little homework. What does this company actually do? How do they make their money? And it means you have to avoid anything that promises to make you rich quick. Your best tools are patience and knowledge, not luck. Okay, so we've busted some myths. The theory is starting to make sense. But how do you actually go from understanding all this to making your very first investment? Let's walk through the practical steps right now. First off, let's set some realistic expectations. A bank fixed deposit, an FD, might get you around 6% a year. Gold or real estate has historically been around 10%. Now, with a well-chosen portfolio of stocks, especially in a growing economy like India's, it's pretty reasonable to aim for an average annual return of around 18 to 20% over the long haul. That's almost 3 times better than a simple FD.
This is another huge hurdle for so many people. There's this common idea that you need a fortune, tens of thousands or even lakhs of rupees just to get in the game. But is that actually true? Not even close. You can seriously start with as little as 1,000 rupees a month. For a lot of us, that's less than what we spend on coffee or streaming services. The amount you start with is way less important than just being consistent. And the power of starting small is just incredible.
Okay, check out this simple formula on the screen. It is so powerful. Step 1, you start with just 1,000 rupees a month. Step 2, every year, as your income hopefully grows, you just increase that investment by 15%. Step 3, you earn a reasonable, totally achievable 15% average return. And step 4, you just do this consistently for 25 years. And the result? 1 crore rupees. That's 10 million. And it all started from just 1,000 rupees a month. Now, this isn't magic. It's the beautiful math of compounding. It's where your returns start earning their own returns. It just shows you that time and consistency are your most powerful assets.
So, what do you practically need to actually begin? Honestly, it's incredibly simple. You just need these 3 things: your Aadhaar card, your PAN card, and a bank account.
With all the modern online brokers out there, you can open an account completely online in just a few days, with basically zero paperwork. It's that easy.
Now we get to my favorite part. This is where we completely flip the script. Most people think not being a finance expert is a huge disadvantage. But what if I told you it could actually be your secret weapon?
Just think about this quote for a second. It's such a powerful way to look at things. You might not know how to read a complex balance sheet, but you definitely know what makes a good product. You know which companies have great customer service, you know which brands your friends and family absolutely love and use every single day. That's a type of insider knowledge that the so-called experts often miss. Let me be crystal clear about this. You do not need a degree in commerce, finance, or business to be a great investor. It doesn't matter if you're an engineer, a doctor, an artist, or a student. You are perfectly qualified. In fact, sometimes not being an expert can save you from overcomplicating everything. And this brings us right back to those 10-year-olds. So how did they beat the experts? Well, they didn't analyze financial ratios. They just picked the companies they knew and loved as customers, the ones that made their favorite chocolates, movies, and toys. They simply invested in what they understood, and that's a simple, real-world advantage that every single one of us has.
So we've covered the why and the how. We've busted the myths, we've laid out the practical steps. But investing isn't a one-time thing. It's a journey of continuous learning. So the question is, where do you go from here?
The journey doesn't have to end here. There are so many incredible resources out there to guide you. Classic books like The Intelligent Investor or One Up on Wall Street are fantastic places to start. And there are tons of high-quality online courses, newsletters, and blogs that can help you deepen your understanding one day at a time. The real key is just to stay curious and keep learning.
We've gone from fear to understanding, from theory to a practical plan. The only thing left to do now is to take that very first step. So the real question isn't if you should invest, but rather, what will be your first investment?